Very good evening and welcome back. We will begin with the post-tea session. We are now joined by Mr. Arvind Vohra, Group Head, Retail Branch Banking, and Ms. Smita Bhagat, Group Head, Government and Institutional Business, Partnerships, Ecosystems, and Inclusive Banking and Startups. Uh, Arvind and Smita, please.
Good afternoon, everyone. My name is Arvind Vohra. I look after retail branch banking, and I'm going to talk about customer franchise build-up, managing life cycle, and how we have been managing our retail liabilities franchise, and how we propose to manage it in future. And then my colleague Smita will talk about government and institutional side of business, and also alternative banking channels. So I'm going to talk about three things largely. What has been our strategy? So we have a simple strategy in place. How we have been executing, and what's our ambition. And what is the strategy delivering in context of the credibility that we have built over the last 3 years. So the key part of our strategy is multi-format distribution. I know there was a discussion in the morning about branch expansion plans that we have and the numbers, but we'll talk about the numbers is not important part. How we are looking at a bottoms-up process of looking at what is the right micro markets from a both financial and customer point of view and strategic point of view to look at expansion and which kind of format, right? What is our approach to manage customer life cycle? Because you acquire customer and then you manage that life cycle with the focus on proactively understanding customer needs and then serving them, and then be really able to extract the right financial solutions and engage with them with the right solutions as per their needs. How are you using AI-led analytics to proactively identify customer needs and then build need-focused conversations? Building a service-first focus culture is really the bottom line of our relationship management architecture. Enabling phygital transformation. So when you think of branches, we'll talk about the multiple formats, but don't think of just branches as a brick and mortar stores, because I think we are transforming our branches. They're neither branches nor offices. They're more of phygital stores or outlets where we are going to be doing digital rendering while keeping the relationship and humanization quotient intact. And then we'll talk about the growth segments, the rural, employee banking, and government. What has this strategy delivered us in last 3 years? 2x retail CASA in last 3 years, and 1.9x on retail CASA term deposit. So just about double the business in about 3 years, few months, right? What is our ambition? Our ambition is exactly similar to that, right? Double it in next 3.5 years or so, okay? And we come to you with a credibility that we have done it in last 3 years, and we're going to again do it in next three and a half years. So let's start with the seed point, how we are trying to build the customer franchise. So if you look at our journey over the last 3 years, we used to acquire about 3.5 million 4-5 years back number of customers or customer accounts. In 18-19, the FY19 year that we ended, we acquired 4.4 million accounts, which has grown to 8.28. Now the important question is, hey, you are acquiring customers, what are you doing with them? How are they helping you? So if you look at the deposit franchise that we have gained from this 1.9x growth in units is actually 2.1x. Yeah? The new customer acquisition value, the financial year we just ended, is over 71,000 crores, which is larger than the deposit franchise of many banks in this country. Our unique customer portfolio, which means that if you exclude the joint accounts and all of that and put them only under one customer family in that sense, Cust-ID is what we call them, has grown more than 60%, from 27 million to 43 million. I'll also share with you, before I go on to my distribution slide in terms of the strategy and what is the way forward that we are thinking. Number of people we had in March 19 was, and I just took these figures, was some 36,600. 36,600 people in March 19 in retail branch banking, everybody put together. Number of people in March 22 is a little over 47,000 people. So we've grown our number of people by 28% in 3-year period, and we've grown our unit acquisition by 2x and our value acquisition by 2.1x. And this set of people not only deliver the CASA franchise, the fundamental core franchise that we build up, they also deliver more than half of retail assets, almost 80 to 90% of our business banking assets, because assets come in as a hook based on the customer life cycle and the needs at different point in time, right? So retail branch banking is really the owner of creating a customer franchise, managing that in a certain life cycle, and we'll just explain welcome, immerse, nourish, how we have these processes in place. We won't go delve deep into the how part. And then different interventions come in to engage with customers based on their needs. Our immediate ambition in the next 12 months is to scale up to 12 million new customer accounts on an annualized run rate with a new acquisition value ambition of 100,000 crore plus. This is from the new acquisition value alone. I'll talk about the change in base. I'll talk about the growth segments separately as well. And the 6 levers that we spoke about, I'll just go into that. So first of all, how is our distribution strategy playing out? I know Shashi spoke about numbers in the morning. I have numbers in this same slide as well. But the numbers that we're talking about for branch expansion, right? It's a bottoms-up number based on where we see that we are going to have profitable growth delivering in. What is the micro-market science we identify or we build on to understand that where do we really put up a branch if we really want to sort of extract market share. So it is straight away linked to our market share goal objectives for a particular territory. For example, just to amplify the point, we aren't looking at setting up too many branches in large cities, right? Where are we looking at? Shashi spoke about the example of Kelong. 500 crore market. If you set up a branch there, get 10% market share in 2 to 3 years, that's 50 crore of deposit franchise, right? So we identified RBI centers where we don't have presence in. We have presence in 660 districts, right? And the centers which are large enough, with 1,000 crore plus kind of a potential, we have only one branch that has broken even 2-3 years back, more than 100 crore of franchise. So how do we add there? And within those also, we use Google Maps, we use delinquency trends, we use assets trends to understand which exact micro market we should be, having our standard branch. So a lot of these branches would be having rural salience. They will all be phygital enabled. When I say phygital enabled, I'm going to explain that what kind of interventions. But it's all about digital delivery in a physical outlet, so that we bring the best of the both worlds. We bring the digitization angle and combine that with the humanization angle to deliver the comparative advantage in the marketplace. In terms of formats, branches is what we usually see, but we have 4 formats, and Smita will talk about business correspondents in detail. Other than the standard branches, we are looking at smart banking lobbies, the neighborhood small outlet with just one relationship manager. Digital banking unit with just 2 resources. And the cost, the rentals of some of these smart banking lobbies and digital banking units are as low as close to an ATM, right? So behind the distribution numbers that we're talking about, there is detailed bottoms-up P&L-led planning that where is that we are going to be delivering our top line per square feet and bottom line per square feet. The way any retail setup or a globally well set up, well managed retail network should be managed. And within these also, not just set up branches. I mean, 5-6 years back, a lot of banks would just say that every cluster head set up 2 branches and things like those. Now, yes, we look at bureau data and population, etc., but we made it a lot more granular. The chart that you see is every cluster head would have this kind of a chart for every district, right? Every state. Now, this is for Rewari district. It has 3 colors for different pin codes, right? High, medium, low potential. The potential comes from the analytics-led scoring that we do. You press in the link into this, you go down to a community level data. When you go to an Uber and Ola, you see that where your communities are, right? So we identify pockets where a community life is, where a school is, a college is, a university is, a campus is, right? That's the level of granularity. I don't think in banking industry, anybody is planning distribution. It's typically consumer industry way of planning distribution, but that's the kind of science we are, putting behind it. What is that giving us? Our typical break-even period has been 30 to 36 months historically. Right? We've cut it down to 55% of our branches breaking even in 12 to 24 months. Not just that, there are a lot of branches that are broken even in 6, 7, 9 months. Maybe a smaller number, about 10, 15%. But example of a branch, if it's breaking even in 6, 9 months, you can imagine that location was crying out loud, hey, you have a big gap in distribution here. So it is not just about expanding branches, it is about putting the right distribution point. It could be a small branch with 4 members. right? Our average branch typically has 10 members. When we start, we just put 4. In rural versus urban, so a lot of new branches are going to be coming in rural centers, semi-urban and rural, right? And then identifying the right format, whether it's a standard 3-4 member branch or a smart banking unit or a digital banking unit, in terms of giving us the right format in the right place at the right cost. So it's a bottoms-up plan led by financials and customer lens and market share and market opportunity lens. There is no top-down view in terms of we are trying to looking at it. And our last 3-year growth has come in from branch expansion. So if I tell you the data on the first slide, I'll go back to that. This growth that we're talking about on the deposit franchise, between March 19 and 22, 95% of growth has come from same store. As in retail industry, we talk about same stores and new stores. So if March 19 I had X number of branches, those branches have contributed to 95% of the growth in last 3 years. The new branches have contributed 5%, but a lot of these new branches will now start delivering in the next 3-year cycles as they become more mature. So we look at our retail franchise in terms of top line, bottom line, catchment market opportunity, as well as same store versus incremental stores, and how is the contribution moving. But with people strength growing by 28% or 28 to 29%, new customer acquisition almost doubling, new customer acquisition value more than doubling, is almost 50% growth in our productivity over a 3-year period, right? So it's a mix of both productivity-led growth as well as right distribution-led growth that is coming. And when we set up a branch, what do we do there? You know, you get it's a phygital unit. It could be an SBL, it could be a DBU, it could be a small branch. You do the catchment scoping where you identify all the customers in 10 different segments. I'll just talk about which those 10, and each one of them is then split into sub-segments, which are 83 number, 8 of 10, this thing. And then each of these segments we identify, do the potential dimensioning, we acquire customers, then we have a welcome call process or welcome visit process, immersion and nourish in first 30 to 90 days, and then we have AI-led tools like a recommendation advisor and next best action that help our teams to engage with customers based on predictively understanding their needs using our AI engine. And relationship management architecture is the over-encompassing piece. So in our catchment scoping, these are the 10 segments: education, healthcare, entertainment, localized industries, merchants, rural, government, startups, trusts, and prominent individuals. And each of them has 10 to 14 sub-segments. So if you were to ask me that, 6,300 branches, how many of startups have been mapped in the catchment of these? We can give you that number. I have that number. And I have the number in terms of each of these startups further into ed tech, health tech, and 7, 8 of the startup segments, that how many are mapped, how many are in conversion cycle over the next 2 to 3 months, right? And it is not just the branch teams working. Typically a branch team would go and meet the customer, understand the need, and then the branch resources, retail, trade, and forex resources, which are a very important part of business customers, EEG or BBG resource. We build a team, meet that customer, and holistically, bring the HDFC Bank, one bank value proposition alive for him. Next best action is our tool really for analytics-led predictively understanding customer needs. I think there were questions around pre-approved offer in Kapil's session. Pre-approved offers is the way to go. But hey, the question I think is right, that why is many of that, right? So we predict that, and then it goes in form of an extension of an NB as immediate NB, which means the contact and engagement has to be done within 24 hours of loading up into the CRM, right? So interventions like those. And we've launched this only immediate NB about 3-4 months back. Customers have got surprised, some of them, that, hey, how did you know that I was already thinking about this? And I think we need to do better and better job. We are not yet perfect, right? Spark Beyond is our partner in helping us do this, and it will keep becoming better, because the RM's feedback also goes back as one of the inputs to the AI engine, because that will keep improving it as the time goes by because of the machine learning algorithm. So you see some numbers here, not just liabilities, but we've grown our retail assets, dispersal growth, liability change in base book of more than 16,000 crore. And from a liability perspective, we have specific enablers, be it predictive loss of relationship, which is about low balances, loan rejection. Sometimes you reject a file, that liability balance start to dissipate, right? So there are surrogates we build to proactively, predictively understand if there's going to be loss of relationship, and then you engage with them. A tried relationship, value enhancements basis wallet size. My ATS may be a lakh of rupees, but if somebody living in a Nariman Point having a lakh of rupees, comparison to wallet share, I mean wallet size, it's nothing, isn't it? Probably he should have millions, with us in the bank. So we do all of that analysis and then engage with customers. Hey, what is that? And again, it's not really about going and asking for money. That's not how things work. You meet the customers, you understand the right hooks for the customer from a financial solutioning point of view, and build a holistic relationship and sort of then take it along. So you see an example. There is a customer who is doing self-transfer to other banks. He has a loan outside the HDFC bank of 4.8 crores. So the hook here has to be you take over that loan, and so you get the loan back into the bank, and you also get the self-transfers to other banks stopping. And change in base, if you observe, a lot of banks are not able to grow that. Reason being, it typically moves up and down by 2% here and there. We've been able to grow by more than 16,000 crore, and that's something that will continue to sharpen as we go forward. So we spoke about NAV earlier, or the new acquisition value. This is about the base, frozen base or change in base that we talk about. Relationship management architecture, we have the largest in the industry, 13.5 million customers, 5.5 million branch managed RMs, and another 8 million virtual managed RMs. And we are constantly innovating there. Imperia, Preferred, Classic have been our standard programs. But at the top end now, we are adding Infinity, more than 5 crore of net relationship value. We're adding a differentiated program for semi-urban and rural. How many of you think that Imperia is a word most people in rural will understand? Right? So no bank has a rural specific relationship management architecture, right? We are now working Vishisht or some of the things that we are working on, but that has to have very rural centric value adds, maybe a soil testing program, maybe a crop insurance, maybe a few other things, right? And we hope to launch this as early as July. But service first is really the base or the most underlying part of our relationship management architecture, because whatever technology, other things we bring in, it's really about serving the customer well. So just a glimpse of this in about a minute show. So a lot of fundamental work in terms of customer experience basics, etiquette, grooming training. We started this journey of infinite smiles or net promoter score. The first thing was that, treat the customer with a smile. Experience in HDFC Bank should be as pleasant going to an Oberoi hotel or a hospitality industry. Long statement to make, but that is what we endeavor to do. Why can't it happen like that? Why don't you get an Oberoi hotel feeling when you enter an HDFC branch or any bank branch, right? So service is the culture that we are building. Our MD Sashi, he reads each and every email on customer complaint. I read each and every email, and we would agree that we are not perfect, but our intent is to be the best customer experience brand across industries. When you think of Amazon in your living room, right? We want HDFC Bank name from a service point of view, from a customer experience point of view, to be right up there. We don't treat other banks as our competitors, but we treat the best of the digital brands or physical brands to be our competitors. That's the ambition that we have. We are not there yet, but we're going to be there over the next 2 to 3 years. We rolled out Net Promoter Score program, Infinite Smiles. We call that Smile Score. And Net Promoter Score seemed very, very jargonish for a large number of people, and we wanted to keep it emotive. But the meat is not measuring just the Net Promoter Score. The meat is in understanding detractors, right? And each of the detractors, getting back to those detractors and see that what is that we need to improve. NPS fundamentally is an improvement philosophy, right? There are a lot of processes we have improving basis this, but there's a lot more we need to do. There are some big ones which are sort of work in progress at this point in time, but we know that which are the processes we need to keep pace with time. But the first part is engaging back with detractors, listening to them, understanding them. That itself is start of a positive relationship even with a detractor. Our NPS score have moved. This is an independent external benchmarking study. We have an internal interaction NPS also, but we are sharing an external benchmark. This is by Prism, which is done independently by Bain & Company. And we have been consistently improving our scores at about 51. You see the peer banks scores there as well. But as I said, the real meat is using this as an improvement philosophy rather than just get caught in scores. But yes, improving scores always gives us some satisfaction. How are we achieving the phygital transformation? 3 years back, we had some 67 registers in HDFC Bank branches. They have been cut to by more than 60%, and we want to be zero register, zero paper. Right? The digital banking units that we are setting up, we are going to bring them into branches, putting up interesting stuff there, self-service kiosks, tabs with walkout working journeys, and so on and so forth. We also believe that it's important to completely transform how we serve customers, especially if you have to connect to the youth, millennials, and Gen Z much better. This is the age of the QR codes, WhatsApp banking, and so on and so forth, right? Really bank through any channel, whatever you prefer. And whichever channels customers prefer, we should be available in the most easiest way. So we are delivering on the walkout working journeys. 100% branches we have enabled with biometric. Concept of walkout working journey is very simple. You come to my website or come to my branch. By the time you're going out of the door, your journey or the request is executed, right? E-sign for legal documentation and automating all the journeys. Do we have a video here or next one? Reimagining CRM, our entire team is now enabled with CRM on the go so that they don't have to sit in an office to do it. They could be doing their CRM interactions, the NB interactions, recommendations, advisor interactions on the go, even be able to register a service request or a complaint from a customer. This is the concept of walkout working, which is what we are going to be enabling, not just in branches, but branches, our website, WhatsApp, QR code, all pervasive, right? And
Hi, I'm Rashida Sharma, and I've been a customer of HDFC Bank for more than a decade now. So I visited the branch today, Zirakpur HDFC branch, because I had to get my address changed on my savings account. So the manager of the branch, Mr. Varun Kapoor, and the concerned staff, they helped me, and I could change my address, update it on real-time basis using the Wow Journey app. And I am really thankful. I am so elated that I could do it like within a second. Thank you so much.
So the point here is that if all of this is available in net banking, WhatsApp, QR, not only customers get delightful experiences, but earlier the process was there is a page in the net banking, you fill that form, it goes to the back end, we have a TAT of 2 days, there is a soul sitting at the back end, he takes the form, checks it and does it. So not only we get better experience, but we take the cost out at the back end, right? In this process, it's just written real-time basis into the system. A lot of other digitization programs, Insta Savings is already a big part of our account acquisition. We already 56% digital between Smart App and Insta Account app. We want to take it to 70%. Current account, Digi Current account, and the integrated journeys. There were some interesting questions in Kapil's session again on NTB for PL and assets. We want to have integrated journeys also, because the way we manage our life cycle historically, the way I just explained it, even in an NTB scenario, if PL is a hook, right, we could give the customer the option of opening a savings account right there and then itself if it's an NTB customer, right? It's an option. We may not want to mandate it, but at least an option we can give. And we already have the journey through Insta account available, right? Because the preference is if you get the savings out of the customer, it's a lifelong relationship you build. Today you're giving him PL, tomorrow the same customer will need an auto loan, tomorrow the same customer will need an mortgages, right? And that's really the glue that sort of works. So integrated journeys of saving with FD, saving with credit card, DMAT, personal loans will be on the way in next 3 to 9 months. Business Express is again for small businesses and MSMEs, where there could be requirements of bulk salary transfers, completely digitizing their world, where the net banking is not good enough for them, and the corporate net banking is really a high-end system, which is a desktop-based system. So this is something which is also coming in about next 3 to 6 months. It will meet all the requirements of the trade, forex, bulk salary payments, GSTs, and all of those related things to enable the small businesses on the go, on the mobile, while they focus on their business part. The other enabler is the life-centric propositions, like typically, any consumer category we should do. A lot of products, end of the day, can get commoditized in our industry, right? But the trick is in understanding customer needs and then create propositions. Some of the propositions may seem very simple, my account, my choice. But hey, can you guess what is the kind of book size we built on my account, my choice, which is really about giving number of customers' preference, his birthday, his daughter's birthday, or a number 9 it might be adding up to. So can somebody guess what is the kind of book size we built on MAMC? Right? 25,000 crores over the last 3 years. And imagine if a customer has a number which he or she has affinity for, do you think he's going to leave that account ever if he's put his daughter's birthday, right? Simple insight, right? There's no big rocket science or radical innovation there. But similarly, shore cover FDs, health cover FDs, the insight is safety, right? But along with safety, if you talk about a health cover or hospicash, and especially in a COVID scenario, if you get hospitalized, your medical insurance, there are, the companies a lot of times deduct some monies, et cetera, et cetera. This gives them maybe 1,000 rupees per day for up to maximum 15 days. But the point is not in bundling hospicash. The point is that the team that we have built is able to create, if safety is the insight, then you're able to, put together a set of proposition where that is sort of delivered to the customer. Super Kids program, 3 times or 4 times the ATS. How? Because, the meat is not in the savings account. The meat is in, the tie-up with the Byju's and the tie-up with the Jamboree, which can counsel students and get them free counseling sessions when they have to study abroad or study in higher educations. And similarly, unique benefits for employee banking space and special for the lifestyle customers or lifestyle-focused customers where Taj Epicure memberships and other stuff is available. And you saw the segment-led slide, right? So there's a segment-led go-to-market, and there's a segment-led proposition development based on the insight specific to that segment. I'm going to have a doctor's product, we're going to have a senior citizen premium product, right? Imagine a senior citizen, we give them a real good high quality benefit of hospitalization discount or a medical discount, right? And then when you take it to them, that's where the magic happens. So the combination of segment-led go-to-market and segment-led proposition development is one of the backbones, along with the phygital transformation and the digital part that we spoke about behind this customer franchise build-up and the journey. Rural, we spoke about rural, why we need a differentiated approach. Opportunity is very, very large, 26 lakhs crores on deposits, 15 lakhs crores on credit. And other than the distribution expansion, we are looking at a curated program for rural relationship architecture, more curated credit products for rural propositions, rural opinion leader program, partnership with agri universities, there's 67 of them, and we're planning to partner with them on how to spread financial education and also give the focused value adds, be it soil testing programs and others, in partnership with them, and Sarpanch Samaro programs in form of the customer. So there's a completely different and unique go-to-market propositions we're going to build for rural, which is a vertical we have set up, in the vertical that we've set up recently. Because here our ambition is not doubling in 3 years, but doubling in 18 to 20 months. This is the outcomes that we briefly touched upon. So consistently last 3 years we have grown, and this is the retail deposit, this is not the total deposit of the bank, wholesale corporate is separate, more than 2x of the industry, right? We have been gaining market share on all the legs, current savings as well as time. Even on time deposits, which has been little sluggish in that industry level, we have grown more than 2x of that, right? And if you look at the growth dispersion, not just the growth, right? We've gained market share in 90% of the districts we are present in, right? That validates the science of how we are building a bottoms-up approach of not just where we need a standard branch, but what kind of branch and what kind of format do we need that. So this is really our strategy. Customer franchise build up, be the best customer experience brand, consistently grow at more than 2x of the industry growth rate, analytics focused customer conversation, phygital transformation, and in terms of ambition, deliver 2x again in next 3 to 3.5 years. Yeah. So that's all from my side, and we'll be happy to take questions. But I'll hand it over to my colleague, Smita, to talk about government and alternate channels. Thank you.